What's going on, everybody? It's Stas here. So the stock market had a pretty choppy, rocky day today. S&P 500 down 15 points, 0.5% in the red. The Dow Jones went up 36 points, 0.1% in the green. But the NASDAQ, the tech stocks, got crushed, guys. NASDAQ down 190 points, 1.7% in the red. So all over the place today in the stock market. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm actually looking to buy as we're getting deeper into the month of September here. And we had a Fed meeting today, and I want to go over some notes from that Fed meeting, as well as what I personally did in the stock market today, and in general some thoughts, kind of how I'm viewing things moving forward. So if you guys find value, as always, hit that like button for me, subscribe to the channel, that's super important. Subscribe to the channel and make sure to claim your free stock from Webull, link down below, valued up to $1,600. All you have to do is deposit $100 into that account, and that's how you get the free stock. And also join our free Strive Smart Discord chat and Facebook group. Those are also linked right down below in the description box. So let's get into it, guys. Again, today was very choppy. S&P was down, Dow barely pulled a green day, and the NASDAQ got crushed. But on the flip side, we didn't talk about the Russell. The Russell actually did pretty decent as well, up about almost 1%. But either way, all over the place today. The VIX was up 0.45, so 45, it's not cents, but you could just say 0.45, up almost 2% there. So a pretty volatile day overall, a bit of fear as well. And this really tied in with the Fed meeting. And you guys will see the movement of the markets here, especially if we go on the intraday chart. You can see, I mean, we rallied into the Fed market, the Fed meeting, which was at about 2 p.m. it started, and it ended right around 2:40. So we rallied into it, and it sold off aggressively, right? The S&P from about 34.30 all the way down to 33.80, kind of as that Fed meeting wrapped up and as the trading day wrapped up. And what that ended up doing, if we pull back a bit here on the 5-day 5-minute chart, it pretty much sold us right off to that support that we were at yesterday, right around 33.80 to about 33.90, and that's actually also an old resistance, I'd say, from the 14th, or not an old resistance, it's also a support from the 14th, right? So these past 3 days of trading, one thing that the bulls have in their favor is the S&P's held 33.80, 33.90. Okay, that's good. And another thing that you could say is we're kind of moving horizontally, and you guys can see that more on this 20-day chart. Other than that drop to about 33.10, I mean, the S&P's been trading between 33.40 and about 34.20. That is a window of about 80 points. So we're moving up, we're moving down, getting rejected at 34.20 and holding 33.30 as a support. So at this point in time, yeah, the stock market is selling off, but we're not completely in a downtrend, but we're also not completely in an uptrend. We're kind of in a directionless point in time in the S&P and honestly across the markets. And until we either break above 34.30 here on the S&P, or we break below 33.30 and take out 33.10, it's going to remain directionless, in my personal opinion, right? And let's say, for example, 34.20 breaks. That's obviously going to be a good thing for the bulls, technically speaking. That would be breaking us out of the 180 SMA here on the hourly chart. We'd be going back up, maybe to test 3,500. That would bring a lot of momentum, arguably, too, into the S&P 500. But let's say tomorrow we break 33.80, we start to fill the gap down to 33.30, maybe test those lows from last week. That's not going to be too good for the bulls. Obviously, that's going to be more in the bears' favor. And especially if 33.30 breaks, 33.10 breaks, watch out below. S&P 500 could maybe be going to about 32.80 at that point, maybe 32.75. And if we take a look here at the NASDAQ, well, actually, no. Let's keep it in order, guys, because we always do S&P, Dow, the NASDAQ. Let's take a look at the Dow. Dow is up 36 points, and if we take a look, it closed under 28,200. So that's a sign that's telling me, hey, resistance at 28,200. Bulls don't want it above there quite yet. We actually tried breaking out of it earlier. We did break out of it earlier on this 1 day, 1 minute. You can see it. We actually ran up to 28,300, but as that Fed meeting was concluding, as the market started to close, heading into power hour, this thing tanked. It did not hold 28,200. Now we're back under that level, and it's a resistance. So at this point, very similar to the S&P, the Dow is kind of sideways, right? 28,200 resistance and support around 27,500. So tomorrow, if we fail breaking out, or at any point, maybe not tomorrow, at some point this week, maybe even next week, if we fail breaking out of 28,200, we might be going back down mid-27,000s, and that's just the truth. That's what the technicals are telling me, and if you guys want to chime in, feel free down below in the comments, and if you haven't subscribed yet, if you have not subscribed yet, make sure to subscribe to the channel. So Dow Jones, yeah, 28,200, watch out for that on the upside, and the NASDAQ, once you guys see this, you'll be like, oh, okay. Yeah, the NASDAQ got rejected by 11,500. It's not looking too good for the bulls. And if we pull back to this hourly and I draw this little trend line, you guys will notice it got rejected from yesterday's resistance at 11,500, but it was also last week's resistance on the 10th of this month, which I believe was on Thursday. We failed breaking out of there. So until the NASDAQ's able to break 11,550 into 11,600, quite honestly, it's going to be moving sideways. The bears are going to be in charge, and that's just the truth. And on the downside, if 11,000 breaks, if 10,900 breaks, that could be a lot more selling pressure. A lot more selling pressure could come in on the NASDAQ. So overall, I mean, these patterns aren't too difficult to understand. We're pretty much trading sideways. We're really directionless at this point over the past couple of, if you look at the past 5 to 6, 7 trading days. So watch out for those levels of support and resistance I mentioned across the indexes here. Those are going to be huge for picking that direction over these next couple of days in the stock market. So let me know in the comments, guys, what are your thoughts? And for the Fed meeting, we can't talk too much about it because the video would be really long, but the Fed meeting, it was a ton of Q&A, and I really recommend you guys go watch this. Very, very important. Go watch this. Go listen to the questions, the answers from Powell. And the truth is, a couple of key things I got from it is, the Fed is looking to make money more available to Main Street, which I think is great, right? Because at this point, with all the stimulus, they're buying all these bonds, whatever, to bail out these massive companies. At the end of the day, it's not helping the small businesses, the ones that are suffering the most. These people, these businesses are not getting these loans. They're suffering, and they're losing their livelihoods at the end of the day. And I'm thinking this is good. I don't know if it's all talk. Who knows at the end of the day what's actually going to happen, but he's looking to make these loans a bit more accessible to those on Main Street, as they've obviously been widely accessible to those obviously in Wall Street, the big companies out there that we've been seeing getting bailed out. Cruise lines, not even the cruise, well, yeah, some of the cruise lines got money, but, airlines and a bunch of other companies like that. But the thing is, though, with this, there's tons of laws, tons of regulations that actually make it difficult to give loans to Main Street the same way that they give them to the massive companies, because a lot of the time these Main Street companies, they aren't solvent, right? They can't pay their debts. They don't have as good of a credit, as some of these massive companies do. So it's a bit difficult. There's laws, there's regulations that obviously I don't know all about, right? And I'm sure many of you guys don't know much about that either. But yeah, it's hurdles to jump through, guys. You can't just, it's crazy. It's you can't just get money from the Fed. There's, of course, things that you have to do. And also, another interesting thing here, guys, Jerome Powell was questioned if the Fed is running out of ammo, and Powell states, no, not at all, as the interest rates are at 0%. And he also was questioned if the Fed is causing an asset bubble with the stimulus, the 0% interest rates, and Powell responded that they're monitoring it, and they're basically thinking it's not too much of a threat right now, which I think is pretty funny, because the truth is, guys, we all know that you could argue if this is a bubble or not. It's a massive bubble. It's not that big of a bubble. But we all know that the stimulus, the 0% rates, I mean, this causes the stock market to go up. And I feel like he doesn't really admit it. Obviously, he dodges questions. That's what a lot of people do, that you watch on TV and whatever. But he doesn't really admit it. But we all know that the stimulus, the 0% interest rates, it has been causing the markets to pop up, and not really the inflation in, let's say, consumer prices that, yeah, we've seen inflation in consumer prices, but it's just been a lot more in the asset prices, such as homes, such as stocks, and so forth. And I'm sure you guys would agree with me on that down below in the comments. And again, feel free to chime in whenever. So that's all I got from the Fed meeting. Again, there's a lot more to it. The video is about an hour long. Q&A was like 40-50 minutes. So go check it out. All you have to do is type in Jerome Powell Fed meeting. Literally every media YouTube channel was live streaming it, so you won't have trouble finding it. And again, let me know down below in the comments, what are your thoughts? Now we have to get into some things that I did today, my trades. I actually got into DPHC earlier on in the day, and if you guys are in the Discord chat, again, it's free and linked down below in the description box. I try and call out all of my moves in there, and this is one I called out. Also on my Instagram, I called it out, which is at StasserFest. Make sure to go follow me on my Instagram if you guys do want to see what I'm up to throughout the day, call outs, and so forth. So DPHC is one of these SPACs that is taking Lordstown Motor public. And this is one that I like. Workhorse has 10% in Lordstown Motors, which is another, EV company out there. And for me, I got into DPHC this morning. Notice how on this 5-day, 5-minute, we can see a nice sell-off from 30 bucks down to about 26.20. So that piqued my interest right off the bat, that little 12% open up there. And this morning, we got a massive pop. We got a pop to 28 bucks, a little sell-off to about 26.80, and this is where I got in, guys, on this little sell-off, and I got in, let me check my notes, $27.20, and I ended up getting out on this move to the upside. And this is one of those that I timed pretty well. Again, like I say on the channel, you can't time everything, but sometimes, hey, you can time close to the top. This is one that I did. I got out at $28.35 on this run-up. It was right around 2:30 p.m. here on the East Coast, more like 2 p.m., and that was the peak of the day. So I ended up day trading this. I held it for most of the day. And the gain, I believe, was right around 4%. And you guys can see it from 27.20 up to about 28.35. Yeah, it was literally 4% of a move there. And I also got into IPOB, guys. And this is a new SPAC that Chamath Palihapitiya is taking public. And this is very interesting stuff here. This one's called Open Door, and it's directly competing, or not competing, I just made my own word, guys. It's competing with Zillow, and this is interesting stuff. You'll be able to sell, buy homes. You can do a lot of other stuff online with this particular company, and this actually is in my opinion, a cheaper company when you're looking at the whole value of it compared to Zillow. Zillow's market cap's like $20 billion, but this one, a pro forma enterprise value, was at about $4.8 billion when it went public at $10 per share. Not public because, well, that's a little complicated. We'll get into that in another video. But when it was listed at 10 per share, it was valued at about 4.8. So now that it's up to about $16, whatever, it's a bit more valued. Maybe, whatever. We'll figure that out in another video. Maybe like $8-9 billion. But overall, it's a pretty solid value here, considering that the revenue last year was $5 billion. So, the revenue is $5 billion, the enterprise value is $5 billion. So that is a pretty solid value there, in my opinion. And we can take a look here at this screenshot I have for you guys. $600 million pipe raised at $10 per share. That's exactly what I just said. $600 million pipe raised at $10 per share. $200 million came from affiliate entities, including $100 million from Chamath, $58 million from Hedo Sophia. You guys can see that here. And the remainder coming from Open Door shareholders Access Industries and Leonard, along with Open Door Management. Top-tier institutional investors anchoring an additional $400 million, including funds and accounts managed by BlackRock and Healthcare of Ontario Pension Plan, HOOPP. And take a look here at the breakdown here. Here you can see the PIPE, which is, I forget what that stands for. It's an investment. It's just a sum of money, to put it in simple terms, from people that have a lot of money, like Chamath, all these people that I just mentioned. So 10% of the shareholders, the pro forma ownership, is in the PIPE. 79% is from existing Open Door shareholders. 6.6% is in IPOB shareholders, which I bought IPOB, right? So that's us and anybody that owns it. And 3% is from management awards and 1.6% from IPOB sponsors. And this transaction, this SPAC here, is supposed to go through at some point in Q4 of 2020. And on top of that, they have $1.5 billion of pro forma cash held on the balance sheet, with the, again, like I said, the completion of the transaction coming by Q4. So off the bat, I like this company. I mean, I didn't do a huge deep dive into it. I mean, that's kind of a lie, because today I did, but there's still more research to be done, and you guys should go check out the investor conference call. It was about 40 minutes. That came out yesterday on the 15th. Read through all of the documents and so forth. I'm going to do that again. I saw the conference call earlier today, but from my understanding, you know, and I totally agree with this, I think home buying, real estate's all going to be online within the next 10, 15 years, not even 10, 15 years. By then it will be, right? But in the next couple of years, that's where we're headed, in my personal opinion. So this is a company that is well positioned for that. And again, in my opinion, from my understanding, it's at a cheaper valuation than its main competitor, Zillow. And all you guys have to do to research this is go look at opendoor.com and look at it for yourself. So I'm in this one at $16.10. I bought earlier on in the day, and I have a pretty small position, very small at that, because like I said, I have to do deeper research into it, but I wanted to get my toes wet with it. I believe I picked up 100 shares, a nice 100 share round amount, and you know, we'll see what I do with it. I might add more to it, might buy another 100 shares tomorrow, maybe in a week from now, we'll see. But I think there's a lot of potential with this one. And if you guys are not familiar with Chamath Palihapitiya, I think this guy's incredible. He called out Bitcoin at one point, I believe. Did this guy own like half of all the Bitcoin out there or something like that? Maybe I'm exaggerating it, but he owned a lot of Bitcoin early on. He has Social Capital, which he's the CEO of. He also brought SPCE, Virgin Galactic, public through a SPAC last year. So this guy is really innovative. I believe in him. And he was also at Facebook years back. So I like this guy's track record. I'm invested in Virgin Galactic, so I figured, hey, let me just put a little bit here in IPOB. And I also ended up buying some Shopify today, which, guys, it did not go in my favor. I bought at $913. I'm not going to lie, I did not cut losses yet. I'm still holding on to it because I think it'll rebound, it'll recover at about 900. We'll see what happens tomorrow. And the truth is, I don't have too much into it, so I'm a bit more, I guess you can say, risky with the small amount that I do have into it. So I'm looking to just hold on, and I think this is going to be a swing for me. It is going to be a swing for me because overall, it's been moving sideways for almost 3 months, guys, ever since the beginning of July, with resistance at 1,050, support at about 900. So I'm thinking if we get a recovery above 900, 950, this could be a very strong stock on the come up, and it's really been beaten down, quite honestly. And Workhorse is one that did very well today, and I locked profits a bit yesterday. I took a little position, or a little profit yesterday, and today it ran up even more, guys. It was up to 28.20 at one point, up over 10%. It closed at 26.80, so a nice pull down there heading into the close. It closed up 6%, but for me, being in at $23 per share, I'm just holding on to it. I'm letting the rest of my position ride at this point. I think there's more upside. I'm bullish on this company, and yeah, I'm just holding on. And I'm also in Apple still, guys, which didn't do well today. Again, the NASDAQ got hit. Tech didn't do well. Apple down 3%, so I'm still holding on to Apple at this point in time. And this is kind of more of you know, it's a swing that I don't mind giving it some time, holding on to it, because like I've been saying on the channel, I have a lot of cash, guys. I went into today with a ton of cash, and I still have a lot of cash, and I feel comfortable with where I'm at. So I'm holding on to those, and now it's time. But before we do get into these other stocks, let me know what you guys did down below in the comments. And while you're at it, if you're enjoying the video, I would really appreciate you guys if you hit that like button. It really means a lot to me. And also consider subscribing to the channel. Let's get into it. These other stocks. Snow, ticker symbol SNOW. Yet again, another crazy IPO, volatile as ever. This was supposed to IPO, guys, at $120 per share. It ended up getting bid up to $150, $170, $200. It ended up opening up at $250, $270. It went up to $320, guys. This thing is unbelievable. And I was getting questions, Stas, are you touching Snow? Are you getting into Snowflake IPO? And the truth is, no, guys, I'll be quite honest. Not that I'm against the company, but I just like giving IPOs a bit of wiggle room. I like giving them breathing room once they IPO to see what they're going to do. Are they going to, you know, if they rally up and I miss it, okay, whatever, it happens. But a lot of the time, they sell off after they IPO. You know, maybe the hype dies down. We all know this one in particular did have a lot of hype. We'll get into that in a second. But the way I view it is, what's the rush? What's the rush? They just IPO'd. They're going to be in the markets. Let it ride a little bit. Let the hype die down. Then make a more calculated decision once kind of the FOMO, all this dies down, whatever. So overall, this, like I said, it was supposed to go IPO at $120, and earlier this month, it was supposed to go at $75 to $85, but yeah, that didn't happen, guys, as it clearly went up to $320 per share today. IPO'd at like $260 or something. And the company is selling 28 million shares and will raise nearly $3.5 billion from the IPO at its $120 share price, which values this company at $33 billion. I think that's the most highly valued, what is this, a cloud software business, whatever you want to call it, in history, right? And this disclosed last week, Snowflake disclosed that Salesforce, the cloud giant that was recently added to the Dow, and Warren Buffett's Berkshire Hathaway would each buy $250 million in Snowflake, $250 million, that is, in Snowflake stock in a private placement following the IPO. So take a look there at good old Warren Buffett, the guy that is a strict Coca-Cola bank investor, the guy that does not like tech and innovation. This guy's investing in a software cloud type of business. Hey, that's awesome. Kudos to you, Mr. Warren Buffett. You know, you're expanding a little bit there. I'm loving that. That's awesome. And, you know, that's pretty interesting because take a look. And, well, you can't really see it. It's on my iPad. But Snowflake is not a typical Berkshire bet because it is not profitable. And we all know Buffett, he likes investing in companies that are already profitable. So that's interesting there. And one thing worth noting is that it is a fast-growing company. Revenue more than doubled in the past 6 months to $242 million. But the company posted a net loss of $171 million, slightly less than the loss it posted in the same period a year ago. And that makes sense, guys. I mean, a company is not going to be growing massively without burning some money. Growing companies burn money, so okay, they doubled revenue, but they're also losing money. It makes sense. They're a growing company. So watch out for this one. Again, I'm not buying it here. Quite honestly, I'm letting it rock, letting it do its thing, and then maybe I'll buy in later on. We'll see what happens. And another one here is Upwork, which we haven't talked about in a while, but Upwork today did very well, and it's approaching this level that I think is a breakout point. And this is you know, we got rejected here multiple times, so I'm not jumping the gun quite yet. And you guys can see it's at about 1570. We got rejected here once, twice, 3, 4, 5, 6, 7 times in the past couple of weeks. So I'm not jumping the gun quite yet, but if 1570 breaks on Upwork, maybe $16, this one could finally be off to the races here on the nice consolidation that it's been on ever since it reported those earnings. Remember, they reported pretty decent earnings. The stock went up to almost 19 bucks. It sold off down to 14, and that's where we've been consolidating ever since. So I'm liking Upwork. This could be one that I maybe buy money, or not buy money, excuse me, guys, buy shares in tomorrow. And another one here that got decimated today, and it's been getting decimated, guys, is Spotify. And let me not exaggerate, it didn't get decimated. It was down about 1% at the close, 1.3%. Earlier on, it was down to 220. So early on, it was getting decimated. And it's because Amazon is looking to add podcasts in the United States, in the United Kingdom, in Germany, and in Japan. So more competition's coming here for Spotify. Watch out, Spotify. And shareholders didn't like it, but ultimately it recovered from 220 back up to 240. And again, it closed only down almost 1.5%. So not too crazy of a day for Spotify. Too crazy of a bad day. And for me to get into the stock, guys, I mean, at this point, it's still downtrending, kind of like a falling knife almost. So I'm not going to force it here. But if we're able to break out of this 5-day, 5-minute, even this 10-day, 30-minute little downtrend that we've been in, if we're able to take out, let's say 240, 250, break out of 255 even, this could be an opportunity on Spotify, maybe on a reversal. And this is very similar kind of to Shopify. It's been sideways for some time now, pretty much for about 3 months, Spotify and Shopify. Pretty interesting there. So watch out for Spot here. And UPS is another one that I'm interested in maybe hopping in here. And this kind of rode the back of FedEx's awesome earnings yesterday. The stock went yesterday from about 160 to 170. And it didn't really, I'm assuming that was on the backs of FedEx's earnings, and now we're selling off. I mean, we hit 170, sold off back to about 160. It seems like we are holding that as a support right now, old resistance as a new support. So this very well could be an opportunity on UPS, let's say from 160, 162, maybe up to 170 again. So watch out for UPS. Another one that I've been getting questions on is Oracle. Yes, I'm still watching Oracle, and they're still looking at this TikTok deal to approve it, to let it through. Who knows when that's going to happen? I think they said by the end of this week, so let's see if that ends up holding true. Maybe tomorrow, Friday, we end up getting a decision, and even if it gets pushed over the weekend, I'm still going to be watching Oracle stock, because at the end of the day, it went from 67 bucks roughly down to $60 on the news. It opened up about $7 of potential profit there. So we could end up getting that move, that gap filled right back up to the mid-60s. So I'm watching Oracle for exactly that. Coca-Cola is another one here, ticker symbol KO. This is one that has been doing decent recently. And taking a look at the 4-hour chart, you guys can see ever since we broke 50 bucks, we called that out actually, I think last week or 2 weeks ago, ever since we broke 50 bucks out, this thing has been trying to get up to the mid-50s, and that's kind of what I'm betting for here on Coca-Cola. I don't know. I haven't really looked at Coca-Cola's options chain. Let me know in the comments, guys, if you have, but maybe some longer-term call options on Coke. Maybe $55 out of the money calls, maybe for a year out. Maybe that could be a decent play. And again, I didn't look at the options chain. I might dig into it later tonight, but I think this could be maybe a longer-term call option play, maybe a quote-unquote safer swing trade. That's kind of how I'm viewing Coke at this point. I think from 50 to the mid-50s, it's very possible, which is why, again, I'm going to look deeper into those longer-term call options. So let's wrap it up here, guys, almost. Facebook was under pressure today, down 3.3%, down about $9. So tech, I'm watching tech, whether it's Facebook, whether it's Apple, even Amazon, Google, guys, these stocks are getting hit. So you can really just watch all of them, right? Because they all have very similar patterns. Facebook is off a good chunk off its highs. Amazon at this point, I know it's crazy to say this, it's down almost $500 off its highs. So watch out for that. Google, it's down about over $200 off its highs. Netflix is down about $100 off its highs. So I'm watching all of these tech stocks here, guys. Apple, Amazon, Facebook, Google, Microsoft, and Netflix. And we're in volatile times, like I've been saying. So I'm also watching some leveraged ETFs. And by the way, guys, these are very risky. They're dangerous. Be careful. I would not recommend these to the novice investor trader out there. But I'm watching TQQQ and SQQQ, which are an ETF combo, a leveraged ETF combo here that track QQQQ or the NASDAQ. So if the NASDAQ QQQ goes up, TQQQ goes up at a 3x rate to the NASDAQ, and SQQQ goes down at a 3x rate to what the NASDAQ's going down. So let's say you want to short the NASDAQ, you could end up trading SQQQ. If you want to go long the NASDAQ, you can go TQQQ. And I'm also watching SPXL and SPXS, and gosh, I don't even remember the last time we talked about these on the channel. It's been months. I think it might have been since the crash, back in April, March. I haven't talked about these in a long time, but SPXL goes up whenever the S&P 500 is going up at a 3x rate, and SPXS is the opposite, right? It goes up whenever the S&P is going down at a 3x rate. So these are a couple that I'm watching here, guys, and feel free to chime in down below in the comments. What are your thoughts on the markets, stocks you're buying, your thoughts on Snow, your thoughts on IPOB, any moves that I made, the Fed meeting? We talked about a lot in this video. So let me know any thoughts that you have, and if you guys found value, hit that like button for me. Let's try to get this video over 500 likes. I challenge you guys, 500 likes, and subscribe to the channel. And also, join our Discord chat. It's free. Our Facebook group, it's free. And don't forget to claim that one free stock from Webull, valued up to $1,600, which is also the best word, free. And that's linked down below. All you have to do is deposit $100, and that's how you get the free stock. So I'll catch you all in the next video. Thanks for watching. As always, be safe out there, guys. Good luck in these crazy markets. Peace out.